Hey, welcome back to YT Finance, and today we are comparing two great electric vehicle stocks. We are comparing Workhorse WKHS stock to NIO NIO stock. Plus, I have some Workhorse Group news for you all at the end. Like this video right now, subscribe if you are new. If you are already subscribed, thank you so much. Comment down below your thoughts on which company you like better, either NIO or Workhorse. And without further ado, let's jump into our first article. Between NIO and Workhorse, which stock is a better long-run play? Well, we are about to find out. NIO and WKHS are two of the best performing stocks this year, and both companies make electric vehicles. Workhorse makes last-mile delivery vehicles and aircraft, while NIO creates electric cars for the Chinese EV markets. So these two are not in direct competition with one another. In the past couple of months, alternative energy and electric vehicles have been outperforming the market. Take a look at the electric vehicle index CARS, K-A-R-S, which has increased 104% from its bottom in March, compared to the S&P 500, which is only up 59%. NIO, on the other hand, has gained more than both of these indexes put together because NIO stock has had more than a 1,000% gain since March. But how does this explosive growth stack up against Workhorse stock? WKHS stock has gained more than 1,600% in the same time frame as NIO, and this is despite the sector's concerns of overvaluation of stocks. But nonetheless, electric vehicle stocks continue to climb higher. Both Workhorse Group and NIO have had insane gains in July, but now it looks like Workhorse is consolidating, while NIO stock had a 22% gain recently. This is not bad news for WKHS stock, because in a bull market, when stocks trade sideways and we see consolidation, it could mean a breakout is coming soon. Especially considering all the catalysts that have come together for Workhorse's favor, but of course we will get more into that later in this video. Right now, NIO stock is rated as a strong buy, while Nikola NKLA is clearly a sell. NIO also has an A rating across the board for trading, buying, and holding, its peer grade and its industry grade. Not to mention that NIO is ranked as the number 3 stock in China's stock group. NIO was also recently upgraded by JP Morgan analysts for its predicted price point, which was originally $14 to now it's at $40. But out of the 15 analysts, the average price target for NIO stock was around $21, so do with that information what you will. On the other hand, Workhorse Group was just downgraded by analysts and brokerages to a neutral stock that should be held, which is the exact opposite of what happened to NIO. But Workhorse has the advantage of the mega catalyst, specifically the USPS contract, which has been delayed until after the presidential election. If Workhorse does manage to win a big portion of the USPS contract, you can bet that Workhorse will easily pass NIO. Even if Workhorse does not get the US Postal Service contract, their business model will survive based off of their predicted and current customers like FedEx, like UPS, like Amazon. But honestly, Amazon is not such a clear customer because they signed a small contract already with Rivian, so Workhorse's chances to land Amazon as a customer are yet to be seen. We will also have to account for the upcoming presidential election, because if the polls are accurate and Joe Biden wins the presidency and beats President Donald Trump, then the costs of these vehicles would go down because of the tax credits and subsidies. At least that's what the author of this article is saying. I will let you all debate that in the comments. Workhorse Group is expected to produce about 300 vehicles this year, but their long-term mission is great, and that is to solve the last-mile delivery problem. However, NIO is further along than WKHS because they have had over 12,000 deliveries in just Q3, which was a 154% increase from last year. NIO is referred to as the Tesla of China. To continue being transparent with you all, I do own both NIO and Workhorse. I have a small position in Workhorse, and the same goes for NIO. Now, I do have one more than the other, but I'm not going to tell you which one I like better in this video. NIO is making cars for the higher end market and has amassed a cult-like following similar to Tesla. NIO also intends to make cheaper versions of their vehicles, along with plans to enter foreign markets next year. The author of this article also clearly has a favorite between Workhorse and NIO, but you will have to read the end of this article to see which one the author favors more. I do want to say that neither company, Workhorse Group or NIO, are profitable companies right now, but we will talk about Workhorse's projected profitability at the end of this video. NIO and WKHS have promising current and future technology, but this only gets them out of so much trouble. If we use standard valuation measures, we can better understand the risks that are associated with both companies. NIO has a price to sales ratio of 25 with an expected growth rate of 150%, which is putting them in a good track toward profitability. Plus, the EV market in China is exploding because right now there are only 2.5 million electric vehicles on the road in China, but that number is projected to increase to around 70 million by 2030, which is plenty of market share to go around, which could give NIO a $36 billion market cap. On the flip side, Workhorse is more of a binary play, meaning it will be worth a lot if everything goes right, but if it fails, it will fail very hard. On the next slide, the author tells you which stock he thinks is the best to own, but this video is not to convince you to buy Workhorse or NIO. This video is meant to give you information so you can decide which stock is right for your portfolio. This is why I did not tell you all which one I have more of or which one the author prefers. If you want to read which stock the author picked, the article is linked down in the description below. Our last article is how soon Workhorse will break even and then become profitable. With a financial loss of $37 million and a trailing loss of $137 million, Workhorse is moving further and further away from its break-even point. So what is the soonest estimate of Workhorse turning a profit? Well, 5 industry analysts believe that Workhorse Group is actually closer to breaking even than previously anticipated. According to these analysts, Workhorse is forecasted to have its final loss for the year of 2022, where after that point it will start generating pure profits. Now, this will only happen if Workhorse will continue to grow at a rate of 74% year by year. If we look at this chart, we can see that it's been going sideways and then we have a huge dip. But as time goes on, we can see it climb out of that dip and then start making pure profits toward the right of the graph. This forecast also has assumptions built into it with various catalysts scattered throughout the years, but we won't dive into those. Right now, Workhorse has a positive future. They just have to survive the next 2 years and they are set. The worry right now is that they are being weighed down heavily due to the negative equity on their balance sheet. And that's all I have for you all today. Don't forget to leave a like, comment, and subscribe, and I'll see you in the next YT video.
Let's make this one.